for Great Lakes and Watershed Studies. I'll be your host this evening. We have a great event tonight, but first I want to thank the Division of Research and Economic Engagement, Marketing and Brand Strategy, and WBGU for helping make tonight possible, as well as our graduate coordinator, Kelly Bryant. Our event is modeled after the International Science Cafe movement, encouraging informal conversations between scientists and the public. Thus, the talk will be short and aimed at a general audience, with about 30 minutes devoted to discussion with the speaker and the panel. Our main presenter tonight is Dr. Amanda Cook, who is an associate professor of economics in the Allen W. and Carol M. Schmidhorst College of Business. Dr. Cook holds a BA in mathematics from Grinnell College, an MA in economics from Vanderbilt, and a PhD in economics from Purdue. Tonight, Dr. Cook will be speaking with you about who is really providing your health insurance. So please join me in welcoming her.
Thank you so much for the lovely introduction, Kevin. I'm delighted to be here talking to you tonight and considering the question of who is really providing your health insurance and why it matters. So we're going to start with some vaguely depressing statistics. So an American Journal of Public Health article from 2019 shows that over 2/3 of families that filed for bankruptcy attributed the principal reason of filing for bankruptcy to medical debt. So 2 out of 3 families that went bankrupt did so because of medical debt. At the same time, an article from Health Services Research shows that when we look at the share of income spent on health, that the poorest Americans are spending 34% of their incomes on health, and the middle 20% of Americans are spending 21% of their income on health. And even the highest paid individuals are spending 16% of their income on health. And so we have this juxtaposition between families going bankrupt because of health expenditures, and yet we have fantastically high health spending. And so this is a little bit of a conundrum. So when we think about our risks to households, we think about things like injury, illness, and disability, all of which are related to health. So when we think about insurance as a mechanism to protect households from these health events, we think about an ideally insurable event if it is low frequency and high severity. When we think about what insurance is, it's the transfer of risk from the household to the insurer. And so I'd argue you're going to get something even if you never file a claim. What you get is the peace of mind to know that in case of a bad outcome, you're going to be protected financially. So fundamentally, when we're thinking about what insurance is, we're thinking about the capacity to transfer the risk from the households, which are bad at handling the risk, to an insurer who's designed to handle risk. And to this end, many people think of insurance as sort of a grudge purchase and think that because they never filed a claim, they're not getting what they paid for. Yet health insurance is used frequently, and so we wouldn't think about it as being a low frequency, high severity event. I've used my health insurance a couple times this month already. I took my kiddo to urgent care because he had strep throat. I filled some prescriptions and I had a wellness appointment. None of those are events that we would think of as low severity, low frequency or high severity. So we have to think about our model for health insurance as being a little bit different than our model for homeowners insurance or auto collision insurance. To that end, we think about health insurance as having both a prepaid component and calamity coverage. And the calamity coverage is sort of what we think of as our traditional insurance, low frequency, high severity event. But then we also have this component in US health insurance that's a prepaid plan, and that's going to cover my visit to urgent care or my prescriptions. And a keen observer may notice that me getting a prescription filled is neither a low frequency or high severity event. So the struggle is that in typical insurance, we're thinking about these low frequency, high severity events that are costly. But now we want to consider for a moment what would happen if health insurance were like auto insurance. So imagine that when you go to the grocery store, your car gets a ding, and your auto insurance covers you to go to the body shop and get it buffed out and have it be looking beautiful again. Or if you needed an oil change, or your windshield wiper blades changed, or even if you needed windshield wiper fluid, all of that would be covered under an auto policy if auto insurance were like health. And you can imagine that if it didn't cost you anything, you might be willing to go to the body shop to get that one little scratch buffed out that happened when you parked on campus on a particular Wednesday. And so when we think about health insurance, the fact that it's both serving the functions of traditional insurance and this prepaid component is part of what makes it so expensive. So we think about how much our auto policy would cost if we included everything in our auto policy, and you can see it might be a lot more expensive if it was covering all those other things. Health expenditures are growing and growing fast. In fact, they're growing faster than inflation. So let's think about how our healthcare spending breaks down. So we can think about healthcare spending as having three major components. The first is hospital care, and that's going to take about 50 cents of every dollar. The second is doctor visits, and that's going to be about 33 cents of every healthcare dollar. And the third is prescription expenditures, and that's about 16 to 17% of every dollar. So when we think about this notion of calamity care and prepaid care, the doctor visits and prescriptions, we would sort of lump in the category of prepaid care. And then the hospital visits we might consider our calamity care. So we can see that over half of our insurance dollar is going for things that we wouldn't think of as ideally insurable. So let's talk a little bit about the big picture of the US health insurance system. We can think of it as being comprised as a public component and a private component. And our public system is going to include Medicare and Medicaid, and our private system is going to include a lot of the big names you've heard of: United Health, Anthem, Cigna, Aetna, Kaiser, and your employer. So let's talk a little bit about the history of the private system first to help us understand why we are where we are with health insurance. So in World War II, employers had a wage freeze, and they were unable to offer higher wages to their employees. So they offered a health insurance benefit in lieu of higher wages.
So I just want to do that.
Folks then aren't going to pay the full price of care because providers can charge more since the insured aren't paying the full bills. That might trigger more use, like in our case of if auto insurance were like health insurance, I'm going to take my car to the body shop to get the scratch buffed out. And so the combination of these two things leads to increases in costs. So then in the 90s, there was the managed care revolution. And the managed care revolution was absolutely intended to contain costs. And the way that managed care works is that what it does is it has insurers network with preferred providers. So there are some providers that are in network and some providers that are out of network. And for the providers that are in network, the insurer negotiates a much lower cost for their enrolled individuals. And you might ask yourself, is this really important? And in fact, the notion of managed care, the way I've just described it, is ubiquitous. So in the 1990s, we went from having about 8% of plans having managed care at the start of the decade to having over 90% of plans involve managed care by the end of the decade. So now managed care has become the new framework for thinking about health insurance. Okay, but now I'm going to need you to hold on to your hats because what I'm going to show you next is outrageous. So I told you that I had used health insurance a few times this month. One of the things that I did is I took my little dude to the Toledo Hospital to have a heart echocardiogram. Mom, if you're watching, he's fine. Please don't worry. The hospital billed over $5,000 for this procedure. But what you can see is that my health insurer, on my behalf, negotiated a discount of $3,600, leaving me with a bill of $1,400. Now, the important thing to focus on here is that my portion of the bill is less than 1/3 of the original amount billed by the hospital. And so the thing that this means for us using and accessing healthcare is that we really require an insurer to help us access rates that are reasonable, right? So without a health insurer, I would have paid more than 3 times the cost for this echocardiogram for my kiddo. And when we think about insurance, this is actually a critical function of insurers, negotiating these rates and allowing individuals to access rates that they wouldn't be able to negotiate on their own because insurers are so big is actually a critical function of insurance. So we've talked a little bit about the history of the private sector, and now we're going to think about the public component. So we want to think about Medicare and Medicaid that were established in the 1960s, and they had this social function. The purpose of them was to protect older folks and kids. However, there's been a shift, and the government has relied more and more on the private market to administer plans. So we have this notion that there's sort of this division between the public and the private sphere in US health insurance, but the reality is far more nuanced because the majority of individuals who are enrolled in a public plan are actually in a plan that's administered by a private firm. So the distinction is far less stark than people think. So, for example, in this figure right here, we can see that in 2007, there were 8 million individuals that were enrolled in Medicare Advantage plans. MA plans are plans that are for Medicare enrollees, but run through a private firm. In 2022, that number went up to 28 million. So you're looking at a huge increase over the past 15 years in the fraction of Medicare individuals who are enrolled in MA plans. We also see variation among the states in terms of their Medicare Advantage enrollment. So all of the states that you see here in green have 50 to 60%, so more than half of their Medicare enrollees enrolled in one of these MA plans, which means they're being covered by a private insurance company. The story is pretty much the same when we look at Medicaid. When we look at 2003, we see that there were about 16 million individuals covered under an MCO plan, which is a managed care organization run by a private company. And in 2020, we see 58 million Americans are covered by a Medicaid MCO. When you look at the Medicaid map to look at the variation among how many people who are enrolled in Medicaid are in a plan that's administered by a private firm, you see that 80 to 100%, that dark black color on the map, are administered by private firms. And now, I'm not arguing that this is bad per se. Insurers are really good at what they do, which is why the government relies on them to administer these public plans. But the notion that Medicaid is a public program is really a misnomer when you look at this map that has, numerous states that have 80 to 100% of their enrollees being covered under a private plan. So we're to a place now where public plans are mostly run by private insurers. And the reason that this is an important thing to think about is we have to consider if the objectives of a public health plan, like Medicare and Medicaid, align with private health insurers' objectives, where private health insurers are traded on the stock market and have an obligation to their stockholders to be generating profits. And so I made the point that insurers are really good at what they do, and that's absolutely true. In fact, private health insurers aren't making huge profits on a percentage basis. So an average private health insurer may only make 2 or 3% profit when you consider their premium dollars. And in fact, there are regulations that require 85% of premium dollars to be spent on medical claims, for example. They're MLR requirements. But administrative expenses are non-trivial, particularly when you're considering the cost of negotiating with provider networks, which got increasingly large after the managed care revolution. So we think about this sort of arms race between insurers and providers, both wanting to get bigger and bigger and bigger to have the advantage when we're negotiating rates. And what previous work has found in the economics literature is that when hospital systems get bigger, prices go up. When insurers get bigger, we don't see a change in prices. So from a consumer welfare standpoint, it's not necessarily bad to have big insurers, because they can negotiate lower rates, which then translates to lower prices for families. So when we think about health insurance broadly, we can think about insurance as having, a health insurer as having three primary functions. The first thing that an insurer does is they pool and bear risk. And this is actually a critically important part of insurance. When we think about insurance, pooling is key. The way insurance works is you have to get enough people together in the pool that a bad event is manageable, that a bad event is survivable. And so you understand that a household isn't a big enough unit to be able to necessarily bear that bad financial shock. But if you can get a neighborhood or a county or a state aggregated into a pool, that's going to allow them to better handle bad outcomes and to bear that risk. The second thing a health insurer does is process claims. So when you go to the doctor, you have tests and you have procedures that are done, and the doctor codes those all up and sends them off to the insurance company. And someone at the insurance company has to go through and say, okay, this test corresponds to this rate of reimbursement, and we're going to send a check for that much money. And then finally, as we've mentioned, a role of insurers is to negotiate networks and rates. And as I showed you from the bill from my kid's echocardiogram, that this is a critical function of health insurers in the US, because otherwise I would have been facing a $5,000 bill, and my insurance company negotiated down to less than a third of the sticker price for that care. However, we have some problems because healthcare costs continue to rise faster than inflation. And the vast majority of Americans who don't get their coverage through a public plan get it through their employer. And what has happened with the employer healthcare market is that employers have decided to self-insure. And what this means is that employers are holding on to the financial risk that they used to transfer to the insurance company. So let's think for a minute about why that's a problem. With with employers self-insuring, we're thinking about the employer retaining the financial risk for health expenditures. And they're using an insurer as a contractor to process claims and negotiate rates. And the insurers offer these contracts that are called administrative services only contracts to employers who have interest in retaining their financial risk. But that's kind of problematic because employers aren't really big enough to handle the financial risk that comes with bad health outcomes. It's not unusual to have a health event that's a 1 in 10,000 event. In fact, the National Association of Insurance Commissioners says that an insurance company isn't fully credible until they have 75,000 covered lives. And when you think about employers, there are very few employers that are that big. In fact, we think of an employer as really big if they have more than 1,000. But that's not necessarily the right level of aggregation to aggregate those really bad events, the calamity care that we're thinking about that we want insurance to cover. So, in that way, we think of insurers as not really insuring when they're offering these ASO contracts. So an employer decides to retain the financial risk. They hire an insurer to run the administrative parts of their plan. And then the insurers aren't really holding the risk for these employer groups anymore. Another part of these ASO contracts that's a little bit sticky is now that the employer is functioning as an insurer from a risk-bearing perspective, it means that the employer isn't subject to state regulation. And insurance markets are governed at the state level. So if we believe that the state regulation of insurance markets is important, and insurance is a highly regulated market with requirements for financial solvency, then we're putting ourselves in sort of a sticky situation societally because we have employers who are now insurers and don't have to follow that regulation. To be fair, these employers do have to follow federal regulation, but that regulation is a bit outdated. So ERISA occurred in the 1970s, and I think we can all agree that the US healthcare market has changed a bit since the 1970s. So when we think about these insurers that aren't insuring and are offering these administrative services only contracts, this bar chart is from a paper that is a current project with a couple co-authors of my own, sorry. And what we can see here is that in light blue, you can see that in 2010, we had sort of 35 million individuals that were covered in a fully insured plan. So that means an insurance product which we are thinking of like traditional insurance. It's both bearing the financial risk, it's administering claims, and it's negotiating rates. However, when you look at this tall multicolored column, that's representing the number of individuals who employers are self-funding, and then the employers hire the insurance companies to run their administrative services only functions. So they're under an administrative services only contract. And what you can see is in 2010, we had 95 million Americans under such a plan. But now, when we look at 2019, we see that we have fewer fully insured individuals, about 30 million, and we have sort of 110 million in an ASO plan. You can see also, too, that there's tremendous market concentration. And again, typically in economics, we think of market concentration as not necessarily being a great thing, but when we think about the function of an insurance company, and one of those functions is to negotiate rates, having an insurer be bigger allows them to negotiate more favorable rates with providers. And that translates to lower prices for employers and then their employees who are accessing these services. So this tremendous concentration that we see is actually maybe not tremendously surprising in terms of organizational and ownership structure of insurance companies. And so the thing that's worth noting is that across the 10-year period from 2010 to 2019, the top 3 ASO contractors remained the same. We're looking at Aetna, Anthem, and Cigna. And the funny thing is, people don't even realize that they're in a plan where their employer is self-funding and then they're using an ASO contractor. I actually was giving this talk to a group of academics recently, and a professor from the University of Georgia said, "Oh, well, I don't have one of these plans." And we encouraged him to pull out his insurance card. And in fact, when he flipped it over, he saw in very small print on the back that it said ASO contract, right? And so when we think about people's understanding of their benefits, you might feel really differently about your employer being the person who's financially responsible for your medical expenditures as opposed to a big name insurer. So in fact, it's pretty likely that if you have Aetna, Anthem, or Cigna, that really you're in an ASO contract and your employer is on the hook for your health expenditures. One of the things, though, that's worth noting is that ASO contracts are complicated, and even for big insurers, we see tremendous variation in profits per covered life. So when we're talking about profits in the ASO sphere, we're talking about fees that they take in from employers to run the ASO features, and then we subtract the expenses associated with administering claims and fraud expenses and so forth. So what you can see here is that those top 3 firms that were dominant across this period are making positive profits. But what's maybe sort of surprising is they're not making a ton of positive profits per person. In fact, they're sort of making $40 per person. And when you consider that ASO fees might be $50 a member per month, then really they're making sort of a month of profit. However, when you look at all the other firms that are not top 3 players, what we see is that they're making negative profits. So this contracting is complicated and is hard to price. And so we see this tremendous variation in losses for the not big 3 players. So when we consider all of this information together, we have a bit of a conundrum. We have public plans, which are largely run by private insurers, and we want to think about what that means in terms of incentives for public plans. Are those incentives consistent with public health insurance? Oh, sorry, with private health insurance? We also, though, are in a situation where private insurers are necessary for negotiations with health providers because health systems have grown so substantially since the implementation of managed care that an individual can't get a fair price without an insurer. However, employers self-insuring is fraught, yet it's the reality for 100 million Americans. We have these employers that are too small to really be able to handle the expense of a bad event, and yet that's the situation they're finding themselves in. So we've observed that half of our insurance dollar is going to prepaid care, at least, and that insurers don't even want to be in the health insurance market. And so the reason collectively this is also complicated is because it means that we have to consider how our health system is functioning and working to aid us in the kinds of healthcare we want to have in this country. So I'm going to ask the basic but fundamental question of who is bearing the risk for health expenses? And typically, we think of the government and private health insurers as retaining the risk for these bad health outcomes. But now, the risk has largely shifted to employers. So when we think about the graph I showed you a few slides ago, we have 110 million Americans on these ASO contracts. That means their employer is holding the financial risk for their health. And we have 30 million Americans that are in a fully insured plan. I would argue that your employer is doing whatever it's doing and doesn't need a second job as an insurer. It doesn't need a side hustle. It's already producing whatever it's producing. And yet, it's increasingly difficult for employers to get fully insured plans at prices they find acceptable. So when your employer is holding all of this risk and they're trying to lower costs, which is often why they move to a self-insured plan, then we're in a situation that's a little bit sticky because what the employer is going to do is to change the plan generosity. So they might increase the deductible or they might increase the out-of-pocket max that an individual has to pay. And so then when we think about this system, we started by saying the reason you want insurance is because you are transferring that risk to the insurer. You're getting rid of the financial strain of a bad outcome. And yet, as the insurers have moved the risk to the employers, and then the employers are trying to save money and then transferring that risk back to the households in the form of higher deductibles and higher out-of-pocket max, then we're in a situation where insurance isn't really serving its essential function of transferring risk, which leads to some complicated social problems. So when we think about the fact that so many families that experience bankruptcy do so because of medical debt, and the fact that risk is being shifted back to households consistently through these ASO contracts, we want to ask the question of how do we fix this system? And so I'm going to argue that thinking about how we regulate insurance is in fact a question of social justice. So how do we protect households? How do we support our socially vulnerable populations? And how do we create a system that promotes health and well-being? Well, I think the answer is through regulation, but I'm eager to hear what our audience has to ask questions about. Thank you.
Thank you, Amanda. That was really interesting, and for some of us, maybe a little shocking. So next we'll have questions and discussions by our panel. If you would like to ask a question, please type your question in a chat to me, and I will ask your question for you. But first, Amanda, can you please introduce your panelists?
Oh my gosh, I'd be delighted to. So this is Mary Kate, and she was one of my students in health economics, and she is currently studying in Milan for study abroad, which means that she has stayed up very, very late to be with us. Mary Kate, is there anything else you'd like to tell us about yourself?
Not really. I'm not as, my expertise does not reign as far as Dr. Cook's does in this area, but I'm happy to help answer questions and maybe more like help understand kind of how healthcare like gets paid for, because that was something that was really, really interesting to learn about in my health economics class that we took. Um, for me, it was last semester. But I definitely recommend if you're interested in this topic to look into taking that class because it teaches you a lot about the healthcare system in the United States, the history of it, how it was set up, and how it's financed.
Thank you for
Thank you.
the
We
endorsement.
we love the student perspective here. So thank you. We really appreciate that. So I think I will start with my sort of traditional first question for both the panelists while people are thinking about putting questions in the chat. And that question is going to be, what got you interested in economics? And then how about healthcare economics? So you could start, Dr. Cook.
So, what got me interested in economics was actually while I was teaching high school in Haiti, I became interested in economic development. I was working with an orphan school in Port-au-Prince and a women's clinic up in the mountains, women's cooperative up in the mountains. And so I was interested in how economics and economic development do and do not support communities well. Which led me to go to Vanderbilt to do a degree in economic development, a master's degree in economic development. And then in doing so, I realized I really liked economics. And so I went to Purdue to get my PhD. And I think one of the things that's really important to me about health economics is it's hard to do much when you don't feel well. And so when we think about health, it's a pretty fundamental piece of our experience as individuals. And so if we have large contingencies of the population who don't feel well a lot of the time, that's going to be problematic. And so thinking about our system and how we create an environment that supports people being healthy feels really important to me. So the fact that there's so many medical bankruptcies kind of breaks my heart as a researcher. And so understanding that system deeply and thinking about the implications of it, I find very motivating.
Thank you. Yeah, that's I love hearing people's backstories and what's motivating them and why they do what they do. Mary Kate, do you want to answer from a different
Yeah,
perspective?
sure. For me, I came to BG actually studying international business, and my first semester here, one of my professors was like, have you ever thought about studying economics? And I literally laughed because I took microeconomics and it was just not my favorite class, as I'm sure a lot of BG business students can agree. But then I took macroeconomics, and honestly, I was like, whoa, like this is starting to make sense. Like, yes, econ is a lot of numbers and graphs and research, but it's also at the end of the day, like about how we use our resources and how we allocate those best. And something I'm really passionate about is sustainability. And so that's kind of what first got me interested in economics. And then as I got further in my econ career at BG, I took a class with Dr. Schaefer, who's now Dr. Thurston, I believe. And I asked her a question about like healthcare financing essentially because she mentioned it and she was like, you know what? That's not my area of expertise, but let me point you in the right direction. So I was really excited to take this class. Um, and it really showed me like something I learned in my class last semester was that 20% of the US's like GDP is healthcare spending. Like that is an insane amount of money to spend on a healthcare system that has so many sick people still in it. So that's kind of what has gotten me interested and kept me interested in learning more about um, healthcare and health economics.
Awesome. Thank you. So we'll go to our first question from the chat. Since a lot of companies today are choosing to self-insure, how will this affect insurance companies since they are starting to lose business?
So I would argue that they're not losing business because they have these ASO contracts. And in fact, if you think about the sort of most compelling thing that an insurer offers, it's this transfer of risk. So it's almost like they get to keep the business in terms of the ASO contract, and they don't have to do the hard work of the financial component of it. So it's sort of a sweet deal for them. If you think about the graph that I showed earlier, looking at the composition of fully insured individuals to ASO contracts, the number hasn't declined in terms of total covered lives across that window. In fact, it's increased a bit. So if we think about the 2010 year, we had sort of 35 million in fully insured plans and 95 million in ASO plans. But then by 2019, we had 110 million in ASO plans and only 30 million in fully insured plans. So we have more people who are having a relationship with an insurance company, but it may be through an ASO plan. But the big three have managed to make money on those plans. So you say to yourself, oh, $40 a member a year isn't a big deal until you realize that you're talking about 20 million people. And then all of a sudden that $40 per person seems like a lot more money.
Yeah, that makes sense to me. It's all about the numbers, right?
Right.
Okay, so here's the next question. I think this is an interesting one. Let's see what you think about this. What are some traits implemented in other countries' healthcare systems that you believe would be beneficial in bettering the US healthcare system?
So there are clearly other models that we could consider, and sort of the two big ones are the English system or the German system. And in the English system, they have nationalized health. And so you go to the doctor and everything is paid for. But the problem with that is that we have to ration in some way. And so if you're not rationing on price, then you're rationing potentially on wait times. And so sometimes wait times for non-emergent procedures can take longer. That's at least the argument for why nationalized health may not be spectacular. I've also heard of inefficiencies in the British system where you may have a doctor who's very close by, but if you need blood work, then you've got to go across town and you have to take 3 buses and it takes all day to get the blood work done. Whereas in the US, you would have a lab very nearby, and so it would be more convenient. When we consider the German system, we're thinking about a system in which there's more regulation for the insurance companies, but that the insurance companies have to take people, and there's sort of some internal risk adjustment that allows them to have a more cohesive system. I think that given where America is right now, one of the challenges is we don't really have a public system that functions pragmatically. And so people say to me, well, what about traditional Medicare? And I say, well, the funny thing about traditional Medicare is that even traditional Medicare is organized into these Medicare administrative contract areas. And so then there's a private insurer that's in charge of a handful of states. There are 8 of them in the US, 11 of them in the US, a small number of them in the US right now that run all the traditional Medicare business. And so when we think about moving to a system like one in the UK or like one in the German system, we're pretty far away from that right now. I think possibly a sort of intermediate country might be Australia, right? So they have a Medicare for all system where they have basic services covered by their government or paid for by their government, and they have prices regulated by the government. And then they also encourage individuals to buy private insurance, and it's less expensive the earlier you buy into the system. And so that allows people to have the freedom of choice over doctors. It allows them to have non-essential but very much life-improving surgeries happen faster, like knee replacements. So if you don't have private insurance in Australia, you might have to wait 18 months to have a knee replacement, which might really affect your quality of life. Whereas if you have private insurance, you might be able to schedule it reasonably quickly. And so in that way, they sort of incentivize having the private insurance add-on, but everyone is covered and no one is sort of dying of a basic condition because they can't afford healthcare.
Cool. Mary Kate, do you have any other things to add or any other things you're familiar with? I mean, you're living abroad right now, right? So,
Yeah, it was definitely shocking when I went to school and they told me that they had a doctor on campus that I could see and I wasn't going to have to pay any money to see them. But I would definitely say, so we talked about these different models in class a lot. And one thing that I found really interesting is that people like seem to have a problem with well, there is a problem with overconsumption when it comes to these types of systems. But something that we noticed, like in the US, is that because consumers at the end of the day are bearing the higher cost because the rates go up, because like of all of the stuff that Dr. Cook talked about in her presentation, um, like people won't go to get preventative care and they'll end up utilizing emergency services way more often, which in the long run is way more expensive for insurers and way more expensive for the consumer. And then when the like new rates come out, they're obviously more expensive because someone has to bear that cost. So yes, there's problems with all of the systems, but you'll see that, well, I think that you'll see that preventative, like utilizing preventative care and encouraging people to utilize preventative care and giving people the opportunity to not worry about, well, I'm going to pay, $80 and maybe I can't afford that, like just to go see the doctor because I'm not feeling well. Like this could actually help save a lot of money in the long run.
This is just sort of my own follow-up question. Like, did the AACA improve that at all? Did that affect like people going for preventative care more? I haven't looked into this at all.
So I think yes, if they're insured. I think one of the things that Mary Kate was hinting at was that if you're uninsured, sometimes the only place to get care is an emergency department because they're not legally allowed to turn you away. They have to stabilize you if you're in the middle of a medical crisis. So if you're an uninsured individual and you don't have the $80 to go to urgent care to be swabbed for strep throat, you end up in your local emergency department. You may wait 8 or 9 or 10 hours to get your strep test and find out that you have strep and you need some antibiotics, but that if you don't have the money up front, that might be your only option. And since the ED can't turn you away, we have people who are accessing care in sort of the most expensive setting. And when you think about a hospital balancing its budget, the governmental rates are sort of set up front, and the private insurance rates are the ones that the hospital is going to negotiate. So if they have a high fraction of uninsured individuals coming through their doors, then they're going to need the private payers to pay more to cover the losses associated with uninsured individuals receiving care. And it's entirely rational on the part of the hospitals to do so. You can sort of understand why they're doing it because they can't just absorb the losses themselves. But what that means is it's passing on costs to people who hold private health insurance. So
I think you answered one of my other questions with that answer, which is great. So we'll go to the next question in the chat. This is, I guess this is just a yes or no, but do you think ethical, comprehensive, and affordable healthcare for all is achievable in our capitalist society?
Whew, that's a doozy. So I think this is the place where government intervention or government regulation is sort of critically important. I mentioned before that the insurance industry is one of the highest regulated industries, and it is to protect consumers, that fundamentally health insurance is supposed to be about consumer protection. And where I think we get ourselves into a little bit of a pickle is that sometimes we offer plans that don't make a lot of sense for people. So if we think about the ACA and individuals buying insurance on the individual market, they might be looking at a deductible of $10,000. So the first $10,000 of care that individual receives in a calendar year is on them. And for most people, they don't have an extra $1,000, much less an extra $10,000. And so functionally then, they don't have insurance. And that creates sort of a host of problems. But there's no reason that we can't cap deductibles, right? There's no reason that we couldn't regulate that your deductible can only be a certain fraction of your income, for example, or that your out-of-pocket max could only be a fraction of your income. Now, that may mean the government needs to subsidize some of these plans on the exchanges, but I would argue that implicitly we're sort of doing it anyway if we have more uncompensated care in hospitals, and that with the ACA we had a number of subsidies to help lower-income individuals gain access to insurance. So yes, but it would require some political will, which, while I would love to say I think is easy and possible if people would just listen to me, I think might be a smidge more challenging. But I'd love to hear from Mary Kate on this one.
Um, I think it would be difficult, definitely. I think that there's a lot of, like you mentioned, like healthcare is very politicized in the United States and health coverage is very politicized. Like, because at the end of the day, a lot of people measure a country's success on their GDP. So they're gonna look at their expenditures and they're gonna look at like um, GDP as a measure of how well or good a country is. And I think that we have a lot of pride as Americans, which can be a good thing, but I think sometimes that gets in the way. I know we had a lot of discussions in class about like, yes, these are numbers and like these are expenditures, but these are also people. Like,
Yeah.
they're not just numbers on a graph. It's not just money that we're spending. We're spending money to care for people. So personally, I would say that it's important and I would like to see us go in that direction. But I think until we can meet a middle ground of like, yes, they're numbers. Yes, it's important to make sure we're not over like consuming this stuff and we're not overspending. We also need the people who are making those decisions to recognize that it affects real people and real people's lives.
And I think sometimes there's a pretty big disconnect between people who are designing systems and the people who are living under the systems. I remember a very famous health economist said at a conference once, there are all these people who are eligible for Medicaid and they don't apply and I don't know why. And I sort of glanced at a woman who was sitting next to me and she glanced at me and she sort of whispers, he's never applied for Medicaid, huh? And I laughed because a Medicaid application, at least in my home state of Indiana at the time, was a fairly complex process. I had to go to a building and pick up a form and fill it out, and then I had to mail it back, and then I got a letter in the mail that told me I was rejected for code number blah, 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 and code number blah, 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 blah. And then I had to go to a computer to Google what those codes were and see if I could figure out why I was rejected. And so I think that a system that is sort of inherently very complex on purpose is problematic. So one thing that's coming that health economists are very aware of is that when the state of emergency for COVID ends, states are going to clean up their Medicaid rolls. And I put that in quotes because I find it sort of disheartening. And the idea is that during the state of emergency, individuals were not disenrolled from Medicaid, even if their incomes had changed or even if they hadn't provided verification of continued income thresholds that would make them eligible for Medicaid. And so it's something like 15 million people are going to get dropped off Medicaid rolls, and there are different mechanisms by which people are verifying continued eligibility. But for example, in our home state of Ohio, there is a company that is going to be paid to verify eligibility, but they get paid for each person they remove from the Medicaid rolls, which as an economist does not seem incentive compatible with the notion that we want to make sure that everyone who is eligible is covered. For example, we could link contact information from a Medicaid enrollment that was a few years ago with current information for temporary assistance from needy families. But if I were in charge of the company trying to kick people off the books, I would not do a lot of extra work to find additional contact information for these people. So this is where I think that how we choose to regulate these environments is really important, and how we're going to get outcomes that are promoting health and equity and wellness. Sorry to be a bummer there.
Yeah, well, a lot of realism. I was thinking Mary Kate would be the optimistic student, but I think the realism is helpful. One of the things that it's not really a question, more of just a comment, me thinking about what you're saying is, it seems like to get people that need like preventative care to go to their like regular doctor would be a win-win for everybody.
Right.
It's just confusing to me that, that we have this political entrenchment. But
And I
I'll go to
think,
that. Oh, go ahead.
well,
Go
I
ahead.
think it's tricky, right? Because preventative care should be covered under ACA plans, but ACA plan regulation doesn't necessarily extend to individual employer plans through ASO contracts. So one would hope that they would offer preventative care services for free, but it's not a slam dunk. And so I think as a risk-averse person, if I think I might pay $1,000 for a mammogram and I make $2,000 a month, I'm not sure I want to risk it, even if it should be covered, because it's sort of an unpleasant experience to start with, and then it might be very costly. And so why would I put myself in that situation? I think another thing that further amplifies health disparities is that doctors are now sometimes compensated for performance. And so when working with populations that have historically been marginalized by the US healthcare system, you have less compliance with doctor recommendations because the medical establishment isn't as trusted. And so doctors are documenting, was not compliant with eating fresh fruits and vegetables without acknowledging that the person lives in a food desert. And so that's a pretty impractical suggestion for them without a little bit more support. Some places, though, for optimism, since Kevin, you sort of asked for some. There are some programs now that have coupled things like mobile health clinics with food banks, right? And so when the doctor says what you really need is more fresh fruits and vegetables, here is your first bag, right? Then we're in a situation where we might be able to improve some of those things.
Let's hope. So I'm going to go to the couple more questions from the chat before we finish up. One, I'm going to kind of summarize, was referring to the fact that so many families are going bankrupt from medical expenses. Do you think that future families will struggle more or less with healthcare expenses than they do today?
So healthcare costs have been rising faster than inflation for a long time. And I think absent some significant regulatory change, that healthcare costs will continue to rise, but frankly, they're untenable. And so when we think about the fact that you see these statistics about the average American family can't withstand a $1,500 shock, and yet we call a high deductible health plan one that starts at $4,000 or more for their deductible, we have a sort of misalignment of what folks can manage financially and what the expectations are for a family's contribution. And I think that's sort of one of those places where we really get ourselves into a jam. So I think unless there's political will, unless there is some sort of change in how we regulate employer-sponsored plans, unless there is regulation of private health insurers returning high profits to their shareholders on the stock market, that I don't see the problem getting better soon. Sorry, that's not the question we should end on, Kevin. You got to give me a couple more.
We're not going to end on that one. I've got another one from the chat, and then I've got a slightly more upbeat one that I like to end with usually. So the next one from the chat is, what does overspending really mean? Health outcomes in the US are much worse than countries that use some national health. If people see doctors more often, might that mean that we are assessing health issues before they become more complicated? Kind of related to one of the things I said, but yeah.
So what do we mean by overspending in the context of people seeking out more care? So yeah. I guess the point that I would make is that when we looked at the slide of my kiddo's echocardiogram, the hospital wanted $5,000 for that procedure, and my insurance company negotiated it down to $1,400. But in the UK, the government might have paid $700 for that same exam, and so, or the same procedure. And so I think that one of the things that's challenging is who determines health pricing, right? And so there's been some interesting work in Maryland because since the 70s, they've had a commission that regulates hospital rates at the state level. And so if you go to Johns Hopkins University Hospital and you get an x-ray of your knee, you're going to be charged the same amount of money if you're uninsured or if you have private insurance or if you have governmental insurance with a very, very minor discount. But that's basically unheard of in the rest of the country. And so as we explore different mechanisms for payment, thinking about things like rate regulation might make sense. Now, what rate regulation is going to do is it's going to help the smaller insurers who would be spending a lot of time and money negotiating contracts that are likely to be less favorable, because when the insurer is negotiating a contract, what they're offering to the providers is business directed to the providers. But if you only cover a few thousand people, your business isn't as exciting as if you're United Health and you cover 1 in 7 Americans. So I think the overconsumption is a product of sort of your price and your quantity, and it's not clear to me that the quantity is the part that's wrong.
Yeah, that's interesting. So I think we'll end with my traditional final question for the night, and this is for both people to answer. I think I could keep talking about this all night. I've got like 5, 6 questions that I didn't get to, but we want to be protective of people's time. So let's head to our final question of the night, which is, if you could give one piece of advice to aspiring students, what would it be?
Mary Kate should definitely go first on this one.
That is a loaded question for sure. There's a lot of stuff I wish I knew before I am in the position I am today. But mostly I would say it's important to go after the things you're passionate about. Like I said, I ended up here from asking a different econ professor one question in class about like, so how is care like managed in the United States? Like, that's really interesting. And now like I'm talking on a panel about it, which is really cool as a student, I think. So I would just say like, ask those questions, be curious, talk to people. It can be really, really intimidating to talk to people who are experts in the field, but also like use those resources. You have those resources at your disposal. I am, like you mentioned, in Italy right now. I do not speak any Italian, and that is intimidating talking to people. Like, you can definitely talk to your professors about something they said that interests you, and in fact, they would love to talk about it. So I would just say, yeah, it might seem, I don't know, trivial to say, but definitely like chase after those questions and try to find those answers, because you might find that you create more questions and end up in a place you could maybe do more research on, or find something that you're super passionate about and you're going to stick with it the rest of your career.
And I think the thing I would say is that sometimes when we think about economics, particularly for students who have taken a single economics class in high school, that they think economics is about money. And economics for me is not about money at all. It's about incentives, and how do you create incentive systems that serve the functions that you want for your home, for your class, for your society. And so for me, health economics is really work about equity and inclusion and figuring out how to create a system that serves people, because if you don't feel well, it's hard to do well. And I want to give every kid in our country the opportunity to do well and to succeed. And so I think that thinking about healthcare and healthcare financing and the structure of the financing and how that changes incentives for providers and who's bearing the risk for these things is sort of at the heart of how do we create the society that we want. And people, reasonable people, can disagree about what that society should look like. And I think that there's plenty of room for right answers there, but that I don't think people think economics, an avenue for social justice. But I would argue for me that it is, because without health, it's hard to do much.
Great answers. And for sustainability too, right?
Absolutely.
And lots of other things. That's wonderful.
And if
Well,
I might
wanna
just say
thank-
one more thing.
Yeah, go ahead.
I just kind of want to piggyback off of that. I know you might be tired of hearing it, but like BG's whole thing is like for the public good. And I think that like you should just really try to consider that and take that in stride. Whatever that means to you, it's going to look different. But if you're creating public good and you're doing something that you can be proud about, isn't that exactly what you could ask out of life? So yeah, I would just say keep that in mind as you go throughout your career.
Awesome. Yes, public university for the public good. Okay, so thanks everyone for a great discussion tonight. Please keep an eye open for announcements for future Science Cafe speakers. We've got another one coming. It's gonna be great. Also, for those of you who are local, the Center for Great Lakes and Watershed Studies is holding a film screening tomorrow night of The Erie Situation. It's going to be at 6:30 p.m. in the theater in the Student Union. It's going to be followed by a panel of BGSU scientists, including me. So consider joining us. And thank you all for coming, and we'll be in touch.
Thanks so much.